Hello, everyone. It's Leon from IEA. So as you can see, I am by myself tonight. Brent had a previous engagement that he couldn't get out of. So it's just me tonight. So got had to keep the lives going. So tonight's live is going to be more informational versus actionable. And I'm just going to cover a quick. It's going to be a quick live. It's not going to be long. And it's going to cover kind of one of the big topics that's been going on lately, which is the Apple and Tesla splits, but kind of an area that people may not know about or may not even heard of. So this week, the big news was the Apple split and the Tesla split are coming either this week or next week. But what was announced Monday, a lot of people don't know about, is that the Dow Jones Industrial Average actually announced that they're replacing three companies in the index. And for people that don't know, the Dow Jones is one of the most famous indexes in the world. It tracks the 30 biggest stocks in the United States, and it's nowhere near as popular as the S&P 500 because again it only tracks 30 stocks. The S&P 500 tracks 500, but nonetheless a lot of funds around the world do track the Dow Jones, so it still has some importance. But what happened this week that was really interesting is that they announced that they're going to replace three stocks. They're going to remove three and then add three back. And this is highly rare. I mean, the Dow may replace companies once a decade, if not more. But the fact they're doing three companies in a week is almost unprecedented. And I'm gonna tell you why. And what's interesting is that the reason they're doing this is because of the Apple split. The Apple stock split is directly affecting the Dow Jones replacing these three companies. And the three companies they're replacing are ExxonMobil, Raytheon, and Pfizer, right? So those three companies are coming out. What's interesting is that ExxonMobil has been part of the Dow for over 100 years. So it's been in there, I think, from its inception or a little after. So Exxon's been there forever. And the fact that they're removing Exxon just shows you how the energy sector is no longer that important or anywhere near as important as it was, a couple of years ago. Right now, technology drives everything. Technology is the number one sector that all funds want to track. So Apple's 4-for-1 stock split is directly affecting is the reason why the Dow is changing it. And here's why I'm making this change. Here's why. So just a little background on how indexes work. So most indexes track when they weight the stocks, they weight them by market cap, and all market cap is the stock price times the number of shares outstanding, right? So that's called market cap weighting. The Dow does it like an old-fashioned way, where they actually weight based on the stock price alone. So the high, a company that's worth $100 will have less weight in the Dow than a company that's worth, say, $500. So that the $100 company will move the Dow less than the $500 company. So what's going to happen now? Apple is around $400 or $500 now, and after this, so we'll just say $400. After the split, they're doing a 4-for-1 split. So after the split, Apple's going to go from $400 down to $100. Now remember, the Dow tracks stocks by the stock price. And another thing that indexes love to do is they want to track the companies they have in the index. They want to track the general economy, right? So they want to be in all the sectors: technology, real estate, healthcare. They want to have like a breadth of each sector so that the index will reflect the economy. Well, right now, technology runs the world. I mean, there's a phrase out there that software is eating the world. What that means is that software basically runs the world, which it does. I mean, software is a basis for most technology. And so right now, so remember, the Dow is tracked by weight. It's tracked by stock price weighting, right? So Apple's going to do a 4-for-1 split, going from $400 down to $100. That's going to take not only Apple's influence on the index itself down, but it's going to reduce the Dow's exposure to the technology sector. Because remember, again, as that price reduces, it's going to reduce the influence of Apple on the Dow. So what they're doing is they're removing some old line companies. And the interesting is that Apple's not one of the companies they're removing. So the split is indirectly affecting the Dow itself. So what they want to do is they want to remove some old line companies like Exxon. So they're removing Exxon, Raytheon, and Pfizer. Right. And the reason they're doing that, because again, these are old line companies. Exxon, again, has been in there for 100 years. Pfizer's been around for about that long. I don't know if it's been in the Dow that long. And Raytheon is an old line defense contract, right? So they're removing those three. And what they're adding Salesforce.com or Salesforce. People that don't know, Salesforce is the largest CRM, which stands for Customer Relationship Management Company in the world. It's one of the largest in the US. And it's one of the most influential in the US. They just reported their earnings this week, and it was a blowout quarter. I believe the stock is up like 20 to 30% in 2 days off those numbers. I mean, they're just absolutely killing it. Another company they're adding is Amgen. Another reason they're doing this, they're removing Pfizer, a pharmaceutical, and adding a biotech, which is Amgen. They're not adding, so people that I don't know, a lot of people follow biotechs. Amgen is like an old line biotech. They've been around for 15, 20 years. And of course, we have all these biotechs today, these ones that are like less than 10 years old, but they're really, really volatile. So Amgen is kind of like the OG or the old line biotech. It's not as volatile that will give the index now more exposure to the biotech space versus just the pharmaceutical space. So that's why they added Amgen. And then Honeywell. People that know Honeywell may think, well, why are they adding an old industrial? Well, what a lot of people don't know is that Honeywell actually has a big technology component inside it. So Honeywell is a big conglomerate. They have a bunch of different companies, a bunch of industry they service. But inside that, they actually have a big technology component. So adding Salesforce and Honeywell for the technology, and Amgen for the biotech space. So once that split happens with Apple, their technology exposure, the Dow's technology exposure is going to go from 27% down to 20%. That's a huge drop in the most important sector on the planet. Now, by adding these three companies back in, they're going to take that up from 20% up to 23%. So the Dow is going to get back about half, a little less than half of what they lost when they removed Apple from the index. So that's another kind of tidbit on an effect that the Apple 4-for-1 split is going to have on the market and on indexes. Is that it's greatly affecting the Dow so much they have to replace 3 companies. Something I don't know if it's even ever been done before in history that they replaced 3 at one time. But they definitely don't replace a lot. And to do 3 in 1 week is huge. It shows the effect of that Apple stock split on the Dow. So just another tidbit on the thing we've been talking about this whole week or past 2 weeks with the Apple split coming up, I believe, this week or next. And for people that didn't know, and people that own Exxon, Raytheon, or Pfizer, Salesforce, Amgen, or Honeywell, you may see some volatility around your stock just because of any indexes or any funds out there that track the Dow are now going to have to sell Exxon, Raytheon, and Pfizer are going to have to buy Salesforce, Amgen, and Honeywell. So you may see some volatility around those stocks if you own them going forward. So that was pretty much it for tonight. Brent, again, is not here. I don't know if I said this in the beginning, but Brent is not here. He had a previous engagement. He'll be back next week. If there are any technical difficulties with this live or the replay, first time I'm doing it myself, Brent usually handles the stream. And so we'll see how it goes. Last point is I owe my stock pick. So I'm going to keep that moving. So my stock pick this week is a company called Genpact. Ticker symbol is just the letter G, as in good. Today it closed at 41.82. It was down 0.71%. Genpact is a technology consultancy. They specialize in technology, analytics, and organizational design. Quick factoid on them is the company was started inside of General Electric in 1997. They were spun out of General Electric, or GE, in 2005, and then came public. And then the company became public in 2007. So again, they were actually once part of General Electric, and then was spun out as a technology firm to stand on its own. The stats on it, good sales growth. Their profit growth over the last 2 years is about 14%, and their sales growth for the last 2 years is about 13%. So solid sales, solid growth. It's a tech firm. Like I said, tech runs the world. Most of my picks, I think, have actually been tech, and I believe Brent's have too. And there's a reason for that because, again, technology runs the world. And as I said, the reason that the Dow is making this change is because the exposure to technology they're losing. They want to regain it because technology runs the world. You have to be exposed to technology to get a lot of these gains in the market. So that's it. If anybody had any questions, this was short and sweet. Please put them in the comments below. I will answer them ASAP. And Brett will be back next week. We'll be back next week at our normal time, like tonight, Wednesday at 9 p.m. And catch y'all then.